Jared Bernstein, cabinet member, former chair of the Council on Economic Advisors under President Biden. Welcome to the People's Cabinet.
It is great to be with you.
Jared, can you explain to us what the hell is going on?
I will certainly try. I think we should probably start with tariffs because that word gets thrown around a lot. Let's start by explaining exactly what that is. It is a tax on imports, okay? So when an American company imports something, that is, buys something from another country that they want to sell to American consumers, if that good has a tariff on it, the company has to pay the tax when it comes into the country, literally at the port. Now, that's not
And
when
so,
we,
and let me interrupt you. So if it's $100, the price of the good is $100, and there's a tariff, the company that is who is paying that tariff?
well, the company that's importing the tariff is the company that's importing the good is paying the tariff. And your example is a good one because the math is easy. Trump has been talking about a 10% tariff. So that would mean that that good coming into the country costing $100, the company that's importing it, maybe it's Target or a retailer, would pay $110 for it. Now, the story, very importantly, Dan, doesn't end there because that company will pass that price increase forward to consumers. Maybe not the whole thing, maybe seven out of those $10. But that's why we say tariffs increase consumer costs. And we have a lot of empirical data. We've seen this movie before, and it just doesn't end well for consumers.
So what do you make of the rationale here with President Trump saying that we're going to hike these tariffs if consumers are going to feel so much of the brunt of it?
Well, I think the problem is that his tariffs are so sweeping. They're literally on almost everything coming into the country. Now, back when we were in the government, we had some narrowly targeted tariffs, often to protect nascent or growing industries like clean energy, electric vehicles, batteries, some of our chips production. If a tariff is narrowly targeted, especially against a country that's engaged in unfair trading, say with China, it's a completely legitimate tool. But these sweeping tariffs that he's imposing, they're going to whack the heck out of consumers who are already unhappy with the prices they face.
And so can you explain to me what is happening right now? I mean, I think a lot of people listening have 401ks. I hope they haven't looked at it in the last couple of days. But what are the markets responding to, and why are we seeing such a big sell-off?
What happens in the markets when you have a big sell off is a lot of companies are just flat out worried about what the tariffs are going to mean for their bottom lines. And look, as an economist, what I'm looking at is some of the forecasts where we think all of this is going. We're probably looking at we're certainly looking at higher prices, and we're probably looking at slower growth. For companies, that means less profitability, and for consumers, it means higher costs. Also, these tariffs create tremendous uncertainty. This is really a big kind of Trump specific problem because he does so much of this lurching with his policies, policy by tweeting and all of that, that companies just don't know what's going to happen next week. And that really dampens investment. So this hurts consumers, investments, businesses. That's why they're so broadly unpopular.
And so you're saying that if you're an investor, whether it be an individual or an institution, you have certain projections of revenue growth, profitability for a company. And when you inject something unexpected like this, it alters that projection, and therefore they maybe sell, in this case, sell to adjust for that. Is that a fair assessment?
Yes, but I think we can make it even more concrete because I've been reading about this. I was reading about a building company yesterday, a company that builds commercial and residential properties, and they were going to expand. They were going to buy a new warehouse because they were growing and they needed more space. They're putting that expansion on hold, right? I also read in that same article about consumers who were considering building a new office in their house. This one couple, and they also decided to put that on pause because they're worried about what's happening to the prices of imports. About 10% of the materials that builders use are imported. So that's, I think, a concrete example of what we're talking about.
So what do you think the end game here is for President Trump? I mean, certainly he can't actually be happy about seeing the markets down 8% since its peak in February.
Right. I mean, here's where I think Trump 2 looks pretty different than Trump 1. In his first term as president, he was pretty reactive to the markets. But even today, he tweeted out this morning something about I'm not changing my policies. Again, I don't know how much weight to put on a Trump tweet. He's very lurchy on all this stuff. But I just see him doubling and tripling down and being very unresponsive to the vast unpopularity. It's actually fairly hard to come up with a policy that has this kind of trifecta unpopularity, consumers, businesses, and investors. But he's found that, I don't want to call it a sweet spot, but you know what I mean.
So if he doubles down, what does that mean for the markets? Are they just going to continue to tumble? And what does that mean for consumers who are already spooked by what's going on?
I don't think markets will continue to tumble, though please don't ask me to predict the stock market. But I think that what the markets are going through right now is, again, this uncertainty. They know Trump's doing something bad. They just don't know exactly when, where, and how long it will last. I don't think that Trump's going to have, a new tariff every week. I really hope not. So the markets are kind of waiting to settle. The challenge is they'll be settling at a lower level, and then, hopefully they'll start growing again. That's usually what happens. I want to say something important, though, Dan. We got a good jobs report this morning for March. And so the underlying economy, is still not really showing the effects yet of these measures. Now we're seeing some early signs, some cracks that I don't like, and the jobs data kind of lag behind some of what we're talking about. But there's still time for Trump to reverse course. I just don't think he's going to.
And so, we saw China with a reciprocal tariff
Mhm.
this morning.
Yeah.
First of all, can you explain to our listeners what a reciprocal tariff means
Yeah.
and what a trade war is? Because there's a lot of conversations about a trade war.
A reciprocal tariff simply means you hit me with a tariff, I hit you with a tariff. It's that simple. It's just a bunch of kids on the playground hitting each other here. And China's tariff, not incidentally, that they put now on U.S. goods, so our exports to them, right? We tariffed their imports to us. The reciprocal tariff is now putting a tax on what we send to them, was the same very high level, 34%. That's kind of stratospheric. So that kind of retaliation is, really very problematic for global trade, and it's not good for consumers. It's not good for the economy.
And can you put that in perspective? 34%. I mean, there was conversations about China's tariffs put under Trump's first administration, and I know there was some that were held through the Biden presidency. Can you just give us a little bit of perspective on what 34% means?
Let me put it this way. If you calculate all the tariffs that Trump is putting on and you figure out what they do to the average tariff rate in this country, we haven't seen tariff rates of this magnitude for about 100 years. We're going back to what historians on this podcast might. We're going back to what. Sorry, how to say this. We're actually going back to Smoot-Hawley level tariffs. For people who know their economic history, this was a very misguided and problematic tariffs that probably partly caused and certainly prolonged the Great Depression. I am not predicting a Great Depression. I'm just telling you to give you the magnitude. We're looking at rates of tariffs we haven't seen for 100 years.
And so, can you give us just a little bit more about when tariffs were that high and what Trump is, I mean, from his side, like what he is aspiring to by kind of trying to evoke an era that caused that?
It's really important because what Trump is aspiring to, and again, it's sort of different things on different days, but at least I think at the kind of core of it is the idea that if we have these 100-year level tariffs going back to kind of Smoot-Hartley levels, we can reindustrialize America. We can bring all the manufacturing back. And I'm here to report that that's just not going to happen. That is just a pipe dream of his and his administration. And one of the main reasons is just how different economies are now than they were 100 years ago in terms of globalization. The way I put it is you can't unscramble the globalization omelet. And by that, I mean our manufacturers, American manufacturers, import almost half of what they use to make their stuff, right? 45% of our imports, I'll use a technical economic term and then I'll clean it up, is called intermediate inputs, meaning inputs into the domestic manufacturing process. Cars are a great example. We have a North American production chain for automobiles. Canada, US, Mexico. We work together effectively and efficiently to make good cars I think, pretty good prices. And the and the fact that those and because so much of our own production uses imports from other countries, that means when you do these kinds of tariffs, you make it more expensive to produce here. So when Trump did this in Trump 1 in his first term, when he started doing these tariffs, which were a mere shadow of what he's doing today, he clearly hurt the manufacturing sector for exactly through the channel I'm explaining now. So that's why the reindustrial aspiration, it's just not going to work.
And do you think he deep down knows that, or what do you think he is doing? I mean, he is certainly has many qualities, but I don't think he's stupid. So, what do you think the end game is with him and his advisors? If you were chair of his Council of Economic Advisors, what would you be thinking right now?
Trump has created an alternate reality for himself. And I would actually say he and his team have created an alternative reality wherein all of the facts and dynamics I just took you through, which are empirically very well established, are not allowed entry. Our trade deficit with Canada, meaning the difference between what we sell them and what they sell us, so the trade balance is another way to say it, is $60 billion. The Trump team keeps saying it's 200. Now, we have shown them again and again, you're just citing the wrong number, and they refuse to change that. By the way, they did the same thing with all these deceased people allegedly getting Social Security. It was pointed out to them that they were wrong, and they refused to change their view there. And that to me is being locked in a false reality, and that is hugely problematic for a government.
And so, why do you think he whipped out this big chart? It included an island with nobody on it with a tariff, right? So, where do you think the methodology came from? Because as you know, and our listeners may not know, typically the calculation of a tariff is a very long and thoughtful process on a specific item or category. What do you think the methodology was here?
I mean, this is like you're sort of asking me like a 3-year-old just finger painted something, and you're saying explain that work of art. It's very hard to describe how. It's quite hard to describe what their quote methodology was because say I've yet to hear one economist be able to make any sense out of it. They did a calculation. I won't go through it, but it's one that doesn't make sense to anybody. And then for some reason they divided it by 2, so it gets just weirder, and it ends up with really very large numbers. And yes, they did slap a tariff on a deserted island, so that just kind of gives you a sense of what we're dealing with here.
So, what if you were to try to summarize or explain clearly, and this may be an impossible question, what Trump's trade policy is,
No, it's
and
not.
and go ahead.
Trump's trade policy. Sorry, you finish your question.
No, if you could explain what Trump's trade policy is from your perspective in a way that people might be able to make some sense of it.
I think I could try to explain that. Trump's trade policy is built, first and foremost, on the incorrect view that every country we trade with is ripping us off. If I go to the grocery store and I buy a bag of groceries, milk and eggs and chicken and so on, in Trump's mind, the grocery store is ripping me off. I have a deficit with the grocery store. I paid for something, they have money, I have stuff. Somehow they're ripping us off. It's the same thing with international trade. We as a country buy things from other countries, they sell it. We as a country buy things from other countries, they sell us those things, they export them to us, we import them, and that's the deal. We give them money for the stuff we want and need. There's no ripping off there, but in Trump's mind, it's all a ripoff. And the way to respond to that is to beat the heck out of, friends, and the way to respond to that is to just try to beat the heck out of every other country with whom we trade. And the way you beat the heck out of them is with really high tariffs, and that's the policy right there.
And so, what's the alternative vision? What should we be doing? If you were still chair and Democrats were still in the White House, what would you be doing?
We had a very different vision, and I hope it's not self-serving to say what I think we should be doing is what we were doing. there is a kernel of Trumpian policy here that's correct, which is that we should do more to stand up domestic production in this country. And lots of communities have been deeply hurt by globalization and the loss of manufacturing jobs. The problem is that these sky high tariffs won't help. As I said earlier, they didn't help in Trump 1. He's double tripling down. They're not going to help in Trump 2. What we were doing was using carrots instead of sticks. We were incentivizing investment in domestic production in key sectors that were underinvested in, whether it was clean energy, battery technologies, EVs, solar panels, and so on, chips, of course, computer chips. And we were pulling in hundreds of billions of private capital from the sidelines, responding to the incentives that we built out. We doubled the amount of factory construction in real terms, so inflation adjusted. The dollars spent on factory construction doubled in our terms. So that was working. So I think that's the way to go.
And finally, there's a lot of people before the whole market situation who were distressed, who were maybe decided to remove themselves from getting involved in any kind of political process altogether. There are Democrats who have become MAGA voters. There are people who are, just incredibly scared right now. What's your message to our listeners if they were going to engage a disenchanted voter or a MAGA voter, or just someone who's feeling down about how to re-engage right now?
Well, I think the right way to think about that is I think the right way for such folks to think about that is a simple 5-word sentence. I didn't vote for that. I didn't vote for that. I didn't vote for higher prices. In fact, I think many, especially non-MAGA Trump voters, voted because they hoped that he would lower prices and make housing more affordable and make childcare more affordable. And everything he's doing is pushing it hard in the other direction. Make Social Security more accessible and shore up that critically important retirement pension program. He and then Musk in this case through the Doge are undermining so many of supports that people depend on, and they're aggressive. The topic of our conversation, they're aggressively raising costs. And this I didn't vote for that idea. When I think of I think when a lot of folks look at renaming the Gulf of Mexico or taking over the border of the Kennedys, so all this ancillary kind of retribution, beating up on someone he doesn't like. Again, this is not what a lot of non-MAGA Trump voters voted for. They voted for Trump because they thought he would improve their living standards, because they listened to him promise that he was going to do so. He's moving in exactly the opposite direction. He's hurting their living standards by raising so many of the costs they face, and taking down programs that we helped initiate that is designed to taking down programs that we helped initiate that we're making people better off. Just a little concrete example. When I think you and I worked on this together. Uh, we had a program that led to we had a policy, it was an executive order that led to a higher minimum wage for workers on federal contracts. Okay, they rescinded that executive order. So they lowered the pay of working class people working on government contracts. So folks making uniforms, for example, for our military, things like that. That is that is exactly what so many voters didn't vote for. So I think the most important way to mobilize, to understand, to kind of get straight on what's going on is to just really think about this I didn't vote for that agenda when you look at these policies.
Chair of the Council of Economic Advisors, Jared Bernstein. Thank you for joining us.
My pleasure.